Joining me now is Matthew Mowell. He's a senior economist with CBRE. Matt, so great to see you. Thanks for joining us this morning.
Yeah, it's great to be here. I'm a big consumer of podcasts. I've never been on one, so this is going to be fun.
Well, Matt, I want to start with a level setting question. When you look back into 2025, what's the general sense about the commercial real estate marketplace?
Yeah, so 2025 was more of a year of, I'd say, stabilization for commercial real estate. Our industry has been, I will go as far as say it's really been in kind of a recession in some ways since 2022. I mean, that's when the Fed really started, raising rates on a percentage basis. I mean, it was really a historic increase in interest rates, and is what that caused is the multiplier on the or the yield on income on a commercial real estate to really blow out. So we saw a lot of sectors saw pretty noticeable value losses. So there was that. We Many of us, we all know what's going on in the office space, dealing with work from home. So that sector was has really been dealing with a lot of issues, historically high vacancy rates. Now industrial, where weather things much better, just because there was a boom in demand for in industrial space, and multifamily. It really is very, very nuanced, and this was a sector that was heavily overbuilt in some places, especially in the Sun Belt. I know you're based in Charlotte, Jeffrey. I mean, that's a market that saw a lot of construction and actually pushed rents down. And industrial saw a lot of oversupply too. Now in 2025, all right, to answer your question, that's the bigger backdrop of where we're coming out of. Oversupply, much higher interest rates, office dealing with work, remote work. But in 2025, a lot of these sectors are moving back towards equilibrium. So the fundamentals are beginning to repair. We've seen interest rates come back down, and we kind of ended the year with an uptick in more deal activity. Certainly on the lending side, lenders willing to underwrite loans for commercial real estate. So it seems like we're now entering into a new cycle.
And that, I guess that would be, very good for the industry, of course, and good for consumers. Let me ask you about a specific segment. I'm very interested. I think the audience is very interested around data centers. So those would be centers where, you have artificial intelligence, you have all these server farms. How big of an opportunity is that in 2026? I know there's a lot of legislation and a lot of focus here in the United States. Is that an area of prospective growth this year?
Uh, yes, and the demand story is definitely a hockey stick style, growth, in the space. When you actually look at, rents, and they apparently in the data center space, the rent is measured as rent per kilowatt capacity. We've seen rents grow by 50% since 2022. So this just you don't see that in that type of growth in commercial real estate normally. So it really shows just the exuberance in that space. Now the problem is, there's only so many of the data centers available, and there's a lot of supply constraints here. Just in terms of powering them, where's it going to come from? There's apparently a new thing people say now with building data centers, BYOP. What that means: bring your own power. Like, you better be putting a windmill up on the roof or something like that. And it's quite literally, you see things like this going on. So that's kind of the issue with data centers is this. It makes sense to put up new supply. Where we're going to put it? There's a lot of political backlash against these things. I live in Northern Virginia. It's kind of like the OG of the data centers. It's where a lot of them are. And I'll tell you what, nothing's uniting people like opposing these things. So I mean, you have a lot of these factors in play. It's really going to, I think, limit the supply, of them. But certainly, for now, a lot of growth. Interestingly, from a historical standpoint, though, the issue with data centers is depreciation, just because processing speed became faster. A lot of the servers were condensed. Uh, and a lot of them just became obsolete real quick just because technology changed. So I wonder if maybe over the long term we'll revert to that. If we'll actually have an excess supply of data centers. I mean, that's, if you want my personal opinion, that's something that worries me.
Yeah. Let me ask you about you bring up or I brought up the data centers, but you really expanded upon that, talked about artificial intelligence. How does AI fit into the commercial real estate marketplace?
Wow.
Obviously, there's a data center piece we just talked about, but how does it filter into, for example, building a building or determining whether to lend to build a building? Does it is it becoming more and more prevalent?
But here's how I think about AI. The examples you used, I'm sure it will have an impact in terms of how we finance things, using as much, uh, being able to price things. Absolutely, it's going to play a role. I feel where we're at today in 2026. If you go back in time, like I love history, like looking at year 1999, 2000, wild things were said about the internet. Like after, pets.com blew up, like, see, we told you this is a fad. Like, so I'm just so skeptical of saying where it's going to go.
Hmm.
I think it's definitely going to matter. I think it's going to change how we work. It's going to create a lot of more efficiencies and, how we price buildings, for sure. It's so I'm pretty hopeful about that. What from my job, what I'm thinking about, looking at the economy and how that impacts real estate, I'm thinking about what the impact is going to be on the labor market, right? Because you see, I'm on video here, and you can see the office behind me. A lot of office. It's about bums in seats, and if you're using AI and not people to complete a lot of tasks, even high level tasks like coding, then that could potentially lower demand for the office market. I mean, that's something that actually how what I'm spending a lot of my time thinking about.
Well, let me end on again. I want to talk about investors, and there are all different types of investors. There are institutional investors, there are individual investors, there are foundations, that are pensions. Even with maybe some of the headwinds, longer term, it seems, I don't want to put words in your mouth, but it seems like real estate, buying a portion or all of a building, an apartment complex, a data center, seems like a relatively positive investment long term. It seems like there will be a lot more allocations to this particular asset class. I want to get your reaction to that.
Well, look, I think it's cyclical, like a lot of things. Okay. And right now, I think the cycle we're moving into for real estate looks good. You mentioned real estate as an asset class. What I think is interesting right now is when you compare real estate pricing to other asset classes. Say if you like calculate a PE ratio on real estate, it looks a lot better than PE ratios right now in the stock market, right? So the attract pricing is relatively attractive. So there's that. The thing I think a lot of people forget about is real estate. It's a lot of it can be very operating intensive. Like if you own apartment buildings, as a landlord out there, you have to service a lot of complaints. You have to pay insurance, things like that. And that's really going to matter this time in this cycle we're in right now is how well you can operate a building. And here's what I mean by that. Like if you look at commercial real estate performance over since like the 1980s, it really had an incredible tailwind of rates, long-term interest rates, falling ever since, Paul Volcker spiked them in the early 1980s. Well, as what we see now is we don't expect to see rates continue to have that downward trajectory. Like our house view is you higher for longer. That means the investment performance isn't going to be this just easy money producing strong valuation. It's going to be how well can you operate these buildings? How can you drive solid income? So that's what we're focused on is identifying the markets and being good stock pickers to figure out what drives that income because it's not gonna be as easy as it was in the uh, late 80s, early 2000s buying real estate this cycle.
Yeah. Well, look, we need places to live. We need places to work. We need places to store data. We need places to create and manufacture. So certainly a an important asset class nonetheless. Matt, we're going to have to leave it there. Thanks so much for joining us. And look, we look forward to having you back on the program again very soon, sir.
My pleasure. Thank you.
Well, thanks for watching. And don't forget, we're back again tomorrow morning with another great expert and another great topic. You can tune in right here Monday through Sunday at 7:30 a.m. Eastern Time. And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place, delivered directly to your email box. Check it out at our website.